Now we are coming to the third session, that is support and resistance. So in this session we are going to understand the concept of support and resistance and the principle on which support and resistance is based, and we will also discuss various tools to identify or mark important support and resistance levels on your chart. Okay, first let us understand support and resistance concept. Okay, let me explain this concept with the help of an example. You just imagine you are sitting on a chair. You are sitting on a chair. This chair work as a support because it will not let you fall, right? Or if you are standing on the floor, so this floor work as a support because it will not let you fall. Similarly, roof work as a resistance because it will not let you go beyond this, right? If you jump also, you will fall on the floor, right? So that is why your roof work as a resistance and support work as a floor work as a support. So these levels will not let you go beyond those levels, right? So similarly in stock market there are certain levels which will not let the prices to go beyond such level. So that concept is known as support and resistance. Now let us see the meaning of support and resistance. So support represent a level, low level that a stock price reaches over time, whereas resistance represent a high level that a stock price reaches over time. So stock market opens at somewhere around here and it keeps moving like this, right? So let me draw support and resistance levels. So this is your support level and this is your resistance level. This is your resistance level because whenever stock comes near this particular line, it has taken reverse, and whenever stock reaches this particular level, it is bouncing back, right? So that is why this particular line represent a resistance level and this particular line represent a support level. Stock price is not going beyond this level for a particular time period. So this is all about support and resistance level. And this support and resistance is very much important for a day trader because trading is a probability. Trading is a probability. That means here you cannot expect any strategy to work 100% of the time because it is a probability. It is not certainty like your mathematics. In mathematics what happens, 1 plus 1 is always is equal to 2. Wherever you go, whenever you calculate, 1 plus 1 is always is equal to 2, but you cannot expect this kind of certainty in trading, right? So that is why trading is a probability. If you want to become a successful trader, you should look for a strategy which works most of the time, and this support and resistance is one such strategy which works most of the time. That means support and resistance is having high probability. That is why if you want to become a successful trader, you should master in this particular strategy. So in this session we are going to understand the complete concept of support and resistance and various tools to identify important support and resistance level, right? Okay, so now let us understand the principle on which support and resistance is based. See, the main principle is that is whenever the resistance level breaks, next time it is likely to act as a support. So similarly, whenever support line breaks, next time it is likely to work as a support. Next time it is likely to work as a resistance. So that is what a principle of support and resistance. Okay, let me explain that principle with the help of this chart. See, stock price is moving like this, right? So whenever it comes near this particular level, it has taken reverse, right? Again at this level it is bouncing back, right? Once at this point price breaks this resistance level. See, at this point price breaks the resistance level, and next time when it comes near this particular line, this work as a support. See, this work as a support, it is bouncing back, right? So earlier it was a resistance, but now it works as a support. So this is the principle of support and resistance. Once price breaks the resistance level, next time it is likely to work as a support. So similarly, So this is support line, resistance line. Okay, stock is moving like this, and this time it works as a support. So you just imagine at this, once price comes near this particular line, it breaks that level, right? Next time it works as a resistance. So earlier it was a support. Once it breaks, next time it is likely to work as a resistance. So here also you can see, at this point again it came back, right? So again, so once it breaks this particular line, again it come back, this will work as a support. Earlier it was a resistance, next time it is likely to work as a support. This is the principle of support and resistance. Now talking about various tools to identify or mark important support and resistance level, there are many tools which are available to identify important support and resistance level. So here we are discussing some of the important tools, that is trend lines, right, and pivot point. This is one of the most important indicator, and the CPR, central pivot range, swing highs and swing lows, supply and demand zone. So now let us discuss each of these tools in detail, right? So first one, trend line. So trend is an important thing. It represents the direction of the market. So if you want to trade, you should trade according to the direction of the market. So this trend can be classified into three types, that is uptrend, downtrend and sideways trend, right? Okay, first let us understand uptrend. So market open somewhere around here and it is moving like this. It is making higher highs and higher lows, right? So whenever stock is making higher highs and higher lows, then it is called as an uptrend. See, so this stock made a high, right? Again it came back and it made a new high, right? So this high is higher than the previous high. This is your previous high, and this particular high, the new high, is higher than the previous high. Again this particular high is higher than the previous high, right? And this particular high is higher than the previous high. So if a stock is making continuous higher highs and higher lows, then it is known as a, and here you can see stock is making higher lows. So this is a low, right? And this new low is higher than the previous low, and this new low is higher than this previous low. So if stock is making higher highs and higher lows, then it is known as an uptrend. So this higher highs, if you join these higher high points, then this works as an important resistance, because whenever a stock price comes near this particular line, right, this uptrend line, so it has taken reverse, right? So similarly this line work as a support, right? So this is all about uptrend. So whereas downtrend, it is exactly opposite to uptrend. If a stock is making lower highs and lower lows, then it is known as a downtrend. See, your stock, a market opened somewhere around here and it made a high, and it has came back and made a new high. This new high was lower than the previous high, right? And again made a new high. This new high is lower than the previous high. So it is in a downtrend. Market is in a downtrend. It is making continuous lower highs and lower lows. See, made a low and again it made a new low. This low was lower than the previous low. So that is why it shows the downtrend of the market. So this work as a resistance, this particular line, and this work as a support. And whereas sideways trend, so when stock price is moving in a particular range, right? So it is moving in a particular range, then this range is known as sideways. It is not going beyond this particular range. So this range is known as sideways. There is no uptrend or there is no downtrend. It is moving in a particular range. So this range is known as sideways trend. It is also known as consolidation. So this is your resistance and this is your support. Whenever price comes near this particular line, it is bouncing back, and when price reaches this particular level, it has taken reverse, right? So these are the important trend lines. Okay, let us understand with the help of a chart. So this is an uptrend, and this work as a resistance, as I already mentioned. So when a stock is making higher highs and higher lows, so higher, if you join these points, this will work as a support, right? And this will work as a resistance. So next, downtrend. So here you can see the downtrend. So stock is continuously making lower highs and lower lows. So if I draw, so this will work as a resistance and this will work as a support, right? So this is an important support and resistance level lines that you can make, that you can draw based on your chart, based on a down trend, right? Whether uptrend or downtrend. This is a sideways trend. So stock is moving in this range only. Stock is moving in this range only. So this particular, whenever price comes near this line, it is bouncing back. See, right? And this is a resistance, and stock is not going beyond this range. It is moving in a particular range. This is known as sideways, and this work as your resistance and this work as a support. So this is all about trend lines. Now another important tool to identify support and resistance is pivot point. So pivot point is an important indicator which we use in technical analysis. So pivot points are nothing but support and resistance levels on your chart. So pivot points are nothing but important support and resistance levels on your chart. So this pivot point is considered as a leading indicator because it is purely based on prices, and which will give advance signals. So which will give signals in advance, so that a trader can take buy or sell decision at right time. Whereas other indicators like moving average, stochastic, RSI, they will give delayed signals. That is why those indicators are called as lagging indicators. Okay, so here you can see some horizontal lines. So if you apply pivot point indicator on your chart, you will see some horizontal lines like this. So these horizontal lines are known as pivot points, right? And the central line, pink colored one, is called as central pivot, and the lines above the central pivot are known as resistance pivot or resistance levels. That is R1, R2, R3, resistance level 1, resistance level 2, and resistance level 3. And lines below the central pivot are called as support pivots, support lines. That is support level 1, 2, 3, right? So these are all important support and resistance level. Okay, let us understand this with an example. Market opens at, assume market opens at R1 pivot, and it keeps going up. When it comes near the R2 resistance, so here either it can break this resistance or it can reverse. So assume it is reverse, and when it comes this particular line, it is bouncing back, right? Again it comes near the R2 level, either it can break this resistance or it can reverse. This time, assume this time it breaks the resistance and it keeps going up. When it comes near the R3 resistance level, so it has come back, right? So next time what will happen? It will this particular line work as a support, because, so as I already mentioned, so once a resistance level is broken, next time it is likely to work as a support. So earlier it was a resistance, once breakout happens, next time it is likely to work as a support. This is the principle of support and resistance. And again, so again stocks moving up, and it keeps going up. Again it came back, once it comes near the R3 level, it has taken reverse. So this time it breaks this support level and keeps coming down, and when it comes near this particular line, it is going up. So next time this particular line work as a resistance, because once support, so earlier it was a support, this time it works as a resistance, because once this breakout has happened, next time it is likely to work as a resistance. So this is the principle of support and resistance. So this we have already discussed. So if you want to become a successful trader, you should identify important support and resistance level. And remember one thing, support always represent buyers, right? And whereas resistance represent seller. So support represent buying pressure and resistance represent selling pressure. So buyers takes the market up, and sellers take the market down, right? So buyers, they will push the market up. Because of buyers, market goes up, and because of sellers, market comes down. So this thing you should remember with respect to support and resistance. And this is all about pivot point. And based on time frame, we can classify pivot points into previous day. If you are a day trader, this is most important: previous day high and previous day low. So week, or it can be, you can mark previous week high, previous month high, previous week low, previous month low, and one more point is breakout point. Okay, let us understand this. So this is your chart, and you just assume market opens somewhere around here, and it keeps moving. At this point it closes at 3:30. So 9:15 it opens here, at 3:30 it closes, right? So now you can mark important levels, that is previous day high. This is your previous day high, right? And this is your previous day low. So this will previous day high, PDH, previous day low, right? So these lines will work as an important support and resistance. So this will, for today, these previous day high and previous day low will work as an important support and resistance level. Because if you are a intraday trader, so today is not just an individual day for you, it is an extension of previous day. So you should able to mark important support and resistance level, and these previous day high and previous day low will work as an important support and resistance level. So this will work as a support, and this will work as a resistance. So this is all about previous day high and previous day low. So this you should mark. And the next thing is breakout point. So breakout point, so see market opens somewhere around here, and it stays sideways for some times. Next time it breaks that resistance and keeps going up like this, right? So at this, so this was the resistance, right? So market, prices is moving in this range only. One particular time it breaks that particular resistance, so it keeps going. So this particular point is known as breakout, right? So we can call this, in order to consider this as a breakout, previously market should stay sideways for some time. Then once it breaks, so this particular point is known as breakout. So this is your previous day high. If the market closes at this point, this is your previous day high, and this is your breakout, right? And this is your previous day low. This is how you should mark. Or this breakout can also happen like this. So market opens somewhere around here, it stays sideways, and at some point it will break. So this is a support line, this is a resistance line. Once this support line, so market has to stay sideways for some time, then it has to breakdown has to happen, then only we can call this as a breakout, right? So this is your previous day high, PDH, and this is your breakout, and this is your previous day low. This is how, so these will work as an important support and resistance levels, right? So we will understand this with the help of a live chart. Okay, so chart on 8th, see on 8th, market opens, see somewhere around here, right? So it closes around here, right? So now we can mark the PDH and PDL. So previous day high, this is your previous day high, and this is breakout point, because it stays sideways, and this time this works as a support, and this support line breaks this price breaks the support line, so we can consider this as a breakout, and this is your previous day low. So these will work as an important support and resistance levels. So this is all about pivot points. Next is central pivot range, which is popularly known as CPR. So central pivot range is nothing but, so here you can see some pivot points, right? These horizontal lines represent pivot points, and this one central line, this line is known as central pivot, right? One line above the central pivot and one line below the central pivot, so they will form a range. That range is known as central pivot range, right? So this particular range is known as central pivot range, and the line above the central pivot is known as top CPR, and line below the central pivot is known as bottom CPR. So this work as a strong support and resistance. And there are two types of CPR. There are many types of CPR. In that, two types are very much important. One is wide CPR and another one is narrow CPR. Right? So wide CPR is nothing but this is top CPR and this is bottom CPR. This is central pivot, right? So if the range is wide, then it is known as, there is a huge gap between top CPR and bottom CPR, then it is known as a wide CPR. And when the gap is very narrow between top and bottom CPR, this is known as narrow CPR, right? So when there is a wide CPR, so it is more, this wide CPR, these lines will work as a strong support and resistance. Let's see how. So you just assume market opens somewhere around here, right? It keeps coming down, right? By looking the market, you think that market looks very bearish. So what you will do? You take a short trade here and you will keep your stop loss somewhere around here, right? Somewhere around here, and you take a short trade here, and like prices are keeps coming down like this, and you are thinking that, oh, market is looking very bearish, it may go like this, and I will book my profit somewhere around here. You are thinking like that, right? So once the prices comes near the CPR, there is a more chances that it can take reverse, right? And your stop loss hit. If you don't book your profit here, your stop, it will take reverse, it can take reverse, and your stop loss, here is your stop loss, right? So your stop loss will hit, so you will end up losing entire your profit and you will end up with a loss, right? So that is why when you see a wide CPR on your chart, so if you have taken a short trade and when price comes near the central pivot point, that is a central pivot range, then you should book your profit somewhere around here or here, right? So if you wait then what happened, it can take, most likely it can take reverse and you will end up losing all your profit. So that is why whenever you see a wide CPR on your chart, so when prices comes near the CPR, try to book your profit. Another way, in the other hand, so market opens somewhere around here and it is keeps going, and you think market looks bullish, right? So you have taken long trade here and you kept your stop loss somewhere around here, and once price comes near the CPR, so there is a more likely chances that it can take reverse. So that is why whenever it comes, price comes near the CPR, you should book your profit, right? So otherwise what will happen? It will take reverse and your stop loss hit. So that is why whenever you see a wide CPR on your chart, so better you book your profit when it comes near the CPR, and don't take any trade here, right? And one more thing, if it is a narrow CPR, if you see a narrow CPR, then you need, because if it is a narrow CPR, then we cannot expect a strong support and resistance. So only we can expect a strong support and resistance when there is a wide CPR. In case of narrow CPR, it can break this, if it is a narrow, you just imagine this is a narrow CPR, price can easily break this CPR, right? It is not a strong support and resistance, price can easily break this CPR, right? That you should mind. So here you can see this is a wide CPR, right? So suppose you have taken short trade here, right? So when price comes near the CPR, this is where you should book your profit, right? And if you wait, what will happen? It has taken reverse, your stop loss may hit, or you will end up with a small profit. So that is why whenever you see a wide CPR, it is most likely chances that you should book your profit here, because there is a chances price will price can take reverse at this point, right? And you can see here there is a narrow CPR, and one more thing, when there is a wide CPR, there is a more likely chances that market stays sideways. And when there is a narrow CPR, it is most likely a trending day, either upward or downward. So here there is a narrow CPR and there is a trending day, downward trend, right? And it is not a strong support and resistance. So here you can see easily, so market opens somewhere around here and it easily breaks this CPR, because it is a narrow CPR. Narrow CPR is a weak, represent a weak support and resistance. See, this is a wide CPR and market stays sideways. Since it is a narrow CPR, market is in a trending day, right? So this is all about CPR. So the things that you should remember with respect to CPR, when there is a wide CPR, then this wide CPR works as a strong support and resistance. When you have taken short trade here, when price comes near the CPR, either it is at top or central or bottom CPR, whenever it comes, it can take reverse anywhere. So that's why when it comes near the CPR, so that is where you should book your profit. If you take a long trade here, when price comes near the CPR, you should book your profit, right? So it can take reverse either from bottom CPR or central CPR, or uh, top CPR, right? So that you should keep in mind. And when you see a narrow CPR on your chart, here it doesn't represent it represent a weak support and resistance. It can easily break and go like this or come like this, right? So this is all about CPR. Next is swing highs and swing lows. So these swing highs and swing lows are also important support and resistance levels. So now let us understand what are these swing highs and swing lows. A swing high refers to the peak reached by the stock price before a decline. So that is, it is the peak reached by the stock price before a decline. Whereas swing low, it is exactly opposite. It is a low price reached by the stock before a good uptrend, right? So this is known as swing highs and swing lows. These swing high and this is swing low works as a strong resistance and support, right? So you can mark a swing high as a strong resistance, and this will work as a strong support, right? So let us see on chart. So before a downtrend, stock made a high, right? So this high is known as swing high, and before an uptrend, right? After a downtrend, stock made a low, right? So this low is known as swing low. See, this swing highs and swing lows works as a resistance and support, right? Next tool is supply and demand zone. So it is also an important tool to identify support and resistance levels on your chart. So this supply and demand zones are extreme ends where market turn from bullish to bearish and bearish to bullish. Suppose, see here you can see stock price moving like this, and now you can see back to back bullish candle. When it comes near this particular point, there is a strong selling pressure. You can see this big bearish candle. So this is the point where you can go for short trade, right? Because most of the traders have kept their stop loss here. That is why you can see a selling pressure here. So, and back to back bearish candle again. When it comes near this particular point, you can see a big bullish candle, back to back bullish candle. So this is the best place to go for long trade, right? So you can buy here, you can see a buying pressure, right? So this is what supply and demand zone. So this supply zone most likely to act as a resistance, and demand zone most of the time it works as a support. So that is why, so here you can see when it comes near this particular zone, you can see a back to back bullish candle. Again, when it comes near this particular point, bearish candles, right? So big bearish candle at breakout, so it always indicates a selling pressure, right? So this is what supply and demand zone with respect to support and resistance. With this, we have come to the end of this course. I wish you good luck in your trading career.